After yesterday's lull, the market is poised to regain momentum, with the dollar likely to advance. The outcome will largely hinge on the Bank of England's board meeting. As traders awaited new market catalysts, trading activity remained very subdued. Currencies traded in tight ranges following the US holiday, with the investors closely watching not only the Bank of England but also the decisions by the Central Bank of Switzerland and Norway. Markets were expecting either no change or a cut in the policy rates in these three countries. For now, the score is 1-1. The Bank of Norway left its monetary policy unchanged. But today, the Swiss National Bank trimmed its key interest rate by 25 basis points to 1.25 from 1.5%. Against this backdrop, the country's national currency fell against the dollar. Our experts believe that Bank of England policymakers may follow the path of their Swiss counterparts and cut the refinancing rate. This is supported by yesterday's inflation data, which showed that consumer prices in the UK economy fell back to the regulator's 2% target. With the inflation reaching the target, there is no point in keeping monetary policy tight. Moreover, the European Central Bank has already lowered interest rates, even though inflation in the Eurozone is higher than in the UK. If the Bank of England follows suit, the pound is likely to dip, dragging the euro down. The US dollar will gain upward momentum. The currency did not react to a more dovish stance of the Swiss National Bank. However, the franc's share in the basket of major currencies is 3.6%, and during the last 10 days, market volatility has been high. Now, the concern was mainly caused by political uncertainty in Europe instead of the possibility of a key rate cut. Under these conditions, investors switched to safer assets such as the US dollar, gold, and the yen. Thus, the US dollar increased against a basket of 6 major currencies, while the euro slumped to the lowest level since May 1. Earlier today, the US dollar index was upwardly trading within the range of 105.20 to 105.50 points. French President Emmanuel Macron's gamble of holding parliamentary elections could pave the way for the far right or far left to come to power. And this shift could burden the country's economy with the high expenses. Additionally, Eurozone bond markets face a test on Thursday. France is auctioning its debt obligations amid political uncertainty. In the case of failure, the euro will experience additional pressure. However, early on Thursday, the single currency managed to avoid massive sell-off. As a result, the volume of short positions dropped near the support level of 1.07. As a result, the price rebounded within the range of 1.0716 to 1.0752 and stagnated. To resume falling, the euro-dollar pair should settle below 1.07 on the daily chart. Otherwise, the euro may launch a gradual recovery process after its recent drop. Oil is trying to recover to yesterday's levels, but its attempts are feeble. Brent crude is currently stuck in a tight intraday range of 84.80 to 85.80 due to a lack of drivers. There is a high probability that the oil prices will decline today. Much will depend on the U.S. Energy Department's report on crude oil and fuel inventories. If it shows an increase in the stockpiles, oil prices are likely to come under pressure. Moreover, crude is already overbought, and the market needs a reason for a local pullback. Alternatively, a drawdown in the inventories could push oil prices higher. After all, the main driving force behind oil prices has been strong growth in demand. These two factors, decreasing inventories and the growing demand, are the best catalysts for the assets rally. You have watched the market review on the InstaForex TV channel. We wish you profitable trading and see you soon.